You've traded fair value gaps before. Price rips, leaves an imbalance, and you wait for the pullback. Sometimes it works. Price tags the gap, rejects, and you catch the move. But other times, price blasts straight through like the gap never even mattered. Most people call that a failed gap. Big mistake, because it's not failure, it's the flip. And that flip creates something called an Inversion Fair Value Gap, or IFVG. That's when a normal gap breaks, flips sides, and turns into one of the sharpest entry levels you'll ever trade. Support turns into resistance, and resistance turns into support. And when you spot that flip in real time, you unlock deadly trade setups with precision. In this video, you'll learn exactly how inversion fair value gaps form, why they're so powerful, and how a free indicator can automatically find them for you. Stick around until the end, because we'll also walk through a strategy that uses IFVGs to catch high probability setups every single day. But before we jump into the free tool and strategy, let's slow down for a second, because if you don't understand what's actually happening inside an inversion fair value gap, you'll miss why it's such a high probability setup. A regular fair value gap is simple. Price moves so aggressively that it skips levels, leaving an imbalance on the chart. You wait for the retest, hoping the level holds. But when price closes through it, that's not just a failed gap. That's the market telling you something big. Control just shifted, buyers lost it, sellers took over, or vice versa. This is what makes an inversion fair value gap so powerful. It's not just a level that might react. It's a level that's already been tested, flipped, and confirmed. And while most traders wipe the zone off their chart, you're staring at one of the sharpest entry points the market creates. That's why we built the IFVG indicator. The second a fair value gap breaks, it flips it and plots it for you automatically. No second guessing, no wasted time redrawing, just clean zones with the exact volume that caused the flip. If you want to follow along, add it to your chart now on TradingView. Just click the Indicators tab, search for Inversion Fair Value Gaps, and click this one by Flux Charts. There's also a link in the description to get access. Before we dive into how to use IFVGs for deadly setups, let's quickly run through how the indicator actually works, because once you understand what it's plotting, the flips you're about to see on your chart will make perfect sense. This isn't a standard fair value gap indicator. It ignores normal gaps. Instead, it waits for a gap to get broken, then instantly flips the zone into an IFVG. On the right-hand side, you'll see the volume that caused the flip. When that number is high, it tells you the break wasn't noise, it was conviction, and that makes the retest of the zone a prime spot to trade. Now, let's talk settings, because how you configure this script decides what actually shows up on your chart. First, you control how gaps are invalidated, by wick or by close. Wick means the instant price breaks through the far edge of the gap, it flips. Close means you wait for a candle to fully close beyond it. Next, zone filtering. ATR filtering makes sure only gaps larger than the average true range get plotted, so tiny, irrelevant gaps in chop never make the cut. Or, you can use volume threshold. That checks the breakout volume against the recent average. If there's no real participation, the gap won't even register. For example, set it to 200% and only flips with double the average volume will show. And finally, sensitivity. Set it to extreme and you'll catch every tiny flip. Drop it to low and only the strongest zones appear. Normal and high sit in between. With those settings dialed, you're ready to use IFVGs. But here's where things get really interesting, because instead of just using them on one chart, we're going to stack them with multi-time frame power using the price action toolkit. The toolkit takes IFVGs to another level. It doesn't just plot them on your current time frame, it maps them across 3 time frames at once. That means you can sit on a 15-minute chart and still see 1 hour and 4 hour IFVGs marked perfectly without ever switching screens. And it doesn't stop there. The toolkit also plots order blocks, breaker blocks, trend lines, market structure, and even comes with a screener that scans all these features across up to 15 tickers and time frames at once. Together, it gives you the clearest view of price action possible. There's a link in the description to get access. Now, let's see how to actually trade this deadly strategy step by step. We'll use the 2-minute chart on the NASDAQ. In the price action toolkit settings, turn on inversion FVGs from the 15-minute time frame. Make sure you enable inversion FVGs and then scroll down to the time frame section. Select the 15-minute and enable it. Now, every higher time frame IFVG will be plotted directly on your 2-minute chart. Also, toggle on buy side and sell side liquidity levels. That way you'll see exactly where buy side and sell side liquidity is sitting, giving you clean targets and context for your trades. Now that the indicator is set up, we're ready to dive into our first trade example, a long setup. The strategy is straightforward. After the market opens, wait for price to dip below a sell side liquidity level and then close back above it. That's called a liquidity sweep. It's your first clue that a reversal is setting up. Next, watch for a sharp move higher. This creates a bullish IFVG on the 15-minute chart. Most traders rush in here, but that's That's the mistake. A retest of the IFVG isn't enough. You still need confirmation. That's where the price action toolkit screener comes in. It shows when price shifts structure across multiple time frames. In this case, a bullish change of character just fired on both the 5-minute and 15-minute time frame for NQ. Now, the setup is ready. Once price pulls back into the IFVG, take the buy. Place your stop at the recent low and target the buy-side liquidity levels above. This is a straightforward setup that happens every single day. Now let's look at a bearish or sell setup. It's exactly like the long setup, except everything is flipped. After the market opens, wait for price to push above a buy-side liquidity level and then close back below it. That's your liquidity sweep and first signal that a potential reversal is forming. From there, watch for an impulsive move lower. This drop forms a bearish inversion FVG on the 15-minute chart, but just like with the long setup, you need extra confirmation. Check the screener. If it confirms a bearish change of character on both the 5-minute and 15-minute charts, the setup is live. Wait for price to retest the IFVG, enter short, place your stop at the recent high, and target the sell side liquidity levels below. And that's the strategy. It's simple, repeatable, and these types of setups form every single day. With the price action toolkit, you see IFVGs on higher time frames directly on your lower time frame chart, so you always know where the real levels are without flipping between time frames. On top of that, the built-in screener confirms structure shifts in real time, so you're never guessing if the market flipped bullish or bearish. And it doesn't stop there. You also get all the core price action tools, fair value gaps, order blocks, breaker blocks, liquidity levels, trend lines, and more, plotted automatically so your chart tells the full story at a glance. There's a link in the description to get instant access. So let's recap. A normal fair value gap is just an imbalance. It might hold or it might fail, but an inversion fair value gap is different. It flips, it confirms, and that makes it one of the sharpest, most tradable levels you'll ever see. When you know how to spot that flip and you combine it with the right tools, you turn failed gaps into high probability entries. That's all for this video. If you found this video helpful, make sure to like, subscribe, and drop a comment below on what you want us to break down next. Thanks for watching, and until next time.